Hi guys, Kristy Parrish Sweeney with the Parrish team at Keller Williams Classic Properties Realty.
And I'm Aric French with Guild Mortgage.
And we wanted to get this market video out because people are wondering, what's happening with the housing market amongst inflation and rising gas prices and rising interest rates. So we wanted to kind of shed some light on all of those items.
Yeah, absolutely. I think it's probably a buzzword right now, but we're seeing interest rates get up above 6%, and the Federal Reserve is continuing to raise interest rates. So what does all that look like and mean in real estate? Like, what are you seeing on the market right now for days on market, for home prices? What are you seeing in your world?
Well, I will say, they say that real estate's cyclical. You have most of our business in the summer months when, school's out and people are just kind of making a move. But it really picked up in like January, February. And it was funny because I was telling my husband, I'm like, I'm kind of behind the ball. I don't have, all these buyers, like I don't have houses for them. But they kind of ticked up because the interest rates, were still low and people wanted to take advantage.
Mm-hmm.
So days on the market has started to kind of increase. We're actually starting to see some price adjustments, which is wild. But, I will say sellers haven't missed the market in case sellers were wondering about that. Economists are predicting kind of a flatten out versus like a complete, downturn of prices. So there will always be, buyers interested in houses, and we do have a lack of inventory. So that alone is kind of pushing.
Yeah, absolutely. I think we're in such a bubble in Central Ohio just because, first and foremost, as rates go up, the point of rising interest rates and the Federal Reserve raising interest rates is to really slow down the demand for homes. Mm-hmm. And when you really look at the numbers, what we're really trying to slow down here is the price above the listing price that the home is actually selling for. So I know over the last 2 years it was really tough for first-time home buyers because they were, wanting to buy a home, let's say with a down payment assistance loan or a low down payment, but needing to come up with a substantial amount of cash for an appraisal gap. And that difference there is what we're really talking about trying to slow down in our market. It probably won't go like that for every market, right? Because there are high-risk markets in America that have weakened demand or lower jobs markets where we could see some price corrections. But Central Ohio, like you mentioned, we have such a supply and demand issue, we shouldn't see prices going down. What we probably will see is prices leveling off.
And hopefully not seeing so much, coverage of appraisal shortage. And, I actually got a client in contract on Sunday, and we went a little bit higher on the asking price, stayed within what I thought it would appraise at just to be safe. But they also were able to ask the seller to pay for a portion of their closing costs. So that just shows that the market's shifting because a lot of my clients, just even a month or two ago, were getting gift funds from their parents, and having to come up with their own down payment plus using their parents' money and I think there was a lot of buyer's remorse as well. So, I just tried to make sure to educate my clients. Here's what this will mean for you. You're buying a house. This is your mortgage. This is the payment, and made sure that they were really comfortable with it before we, just jumped into it.
Absolutely.
Amongst everybody
that's huge. We call it in our industry, or the phrase going around our industry right now is you marry the house, you date the rate. So what that means is really when you look at the numbers, homeowners are typically buying homes for an average of 10 years. It's the longest average that it's been since like the 70s. So the average homeowner, when they buy a house, they're looking at a 10-year span of being in that house. But you can always refinance the interest rate. If rates today are 6%, you can certainly drop that interest rate as soon as the Federal Reserve lets out interest rates, which is projected to be 6 months from right now by the most aggressive economists, and the most conservative ones are saying 2 years. So probably somewhere in the middle of there is the correct answer.
I always tell my clients there's no crystal ball. When they say, hey, what's it going to do in 6 months? What's it going to be like in a year? All of these economists and, Realtor.com and, National Association of Realtors and, we can all kind of predict on what's going to happen. Obviously, the rates are not easily, swayed by us or anything, but I think that, the interest rates going up a little bit has helped thin things out. In fact, the Columbus Realtors just released a news article saying even though sale prices are up May over May and year to date, which is to be expected, that their inventory of homes here in the Columbus market for sale are up 16.2%, and the month's supply of inventory is up 14.3% May over May.
Huge.
So that's looking good.
So to reiterate that, if you're a buyer right now, you have 16% more inventory available than you did a year ago, a month ago, and with more homes available, there's also less buyers because less people are wanting to buy because of higher prices, higher rates, things like that. So if you're a buyer, you should be really excited about these next 6 months. If you're marrying the house and dating the rate, and you're in the market right now, you might be in a position where you're going to have to pay a lot less money for that appraisal gap, and there's less competition. Not no competition.
Correct.
Our market's still super competitive,
Yes.
but maybe a little bit less.
Yes, and also another thing to look at is Realtor.com came out with an article stating the rental prices across the nation hit a new record high for the 15th month in a row. They're up 26.6%, up 26.6% over the past 2 years in metropolitan areas.
Wow.
So, if you're in a position that renting makes more sense, definitely do it. We are not saying go buy a house for the sake of buying a house and taking advantage, of the interest rates before they fly up. We're saying, now's a good time to buy. If you're in a financially good place, you have parents who could potentially lend you some money for a down payment. Gift you money for a down payment. That might be something that you want to utilize. So.
Sweet. Yeah, absolutely. I think now is probably the best time to buy. In, like I said, the last 2, maybe even 4 years, we've had such a low inventory and such an inventory issue that if rates, passing 6% slow down the demand enough, we could see an actual, whole 1 month of supply of inventory, or
we have
maybe even a month and a
0.8 right
half.
now.
Yeah,
0.8 of a month.
Highest it's been in a long, long time in Central Ohio. I mean, really, that's probably the highest inventory I've seen since 2018, maybe.
Yeah, it's been very, very low. So
Right.
we're happy to see some reprieve in any way, shape, or form. So even though interest rates are up a little bit, I was talking to a client today, a first-time home buyer, and we were looking at the difference between a 4% interest rate and a 6% interest rate, and 4% is $4.97 per $1,000 to borrow, and a 6% interest rate is $5.95, something like that. So it's still affordable. It's not, I think my parents said when they first bought their house back in the 80s, it was 15%. So I would say that 6% is not terrible.
Yeah, absolutely.
So
yeah.
we've just seen such low rates for so long that it seems like it's high.
Exactly, you nailed it on the head. So what we're really talking about is on an average home purchase, if you're a first-time home buyer and you're financing, let's say 90 or 95% of it, you're talking about a $200 to $250 higher monthly mortgage payment than 6 months ago because of the interest rates. And that payment is something that you're always going to be able to refinance in the future. If rates drop, if your equity position changes in the house, if you do some repairs to the house, you can always refinance that mortgage in the future. But again, on our end, loan applications for new homes are the lowest level since 2001. So you should have the lowest amount of demand to go up against you, or the lowest amount of competition to go up against when you're buying the house. That's the key, and that's the important part. If you finance, let's say somebody waits 2 years to buy a house, the home is going to go up about 10% this year, probably about 5% next year. So what that means, and what that really translates to, is let's look at the average home sale price in Central Ohio, about $300,000, maybe $340,000, something like that. So $300,000 average price. In 2 years, it's worth $350,000. Well, let's say rates are 6% today, and in 2 years they drop to 4%. If you're financing the extra $50,000 with a 4% interest rate, you're still going to pay more in interest over the life of the loan. You're also still going to have a higher monthly payment than if you bought the home for $300,000 and then refinanced the loan down to your 4% interest rate in 2 years, let's say. So the better option is to buy and refinance later on.
Well, and one last example, I was showing a house in Worthington Schools. They purchased it in 2019 for $250,000, and today are asking $338,000. So almost $100,000 jump in 3 years.
That's insane.
So now is the time to buy, like Aric
Absolutely.
said. Instead of paying more, you would be making that money back and building that equity. So
now, Kristy, so I do have a lot of clients that say, well, we're seeing news about recession, and we're seeing news about home prices going down. And I think there is a lot of news about that in big markets. Do you have any examples of like high risk markets that you are seeing or anything like that?
Yeah, so they're saying that some cities in Chicago and New York and even Cleveland and Philadelphia metro areas are very vulnerable to a downturn right now. And this actually would mean a price decline more than a normal amount. And yeah, these markets could see sales activity fall more quickly and dramatically than other regions, unfortunately.
Yeah, so if you break it out, and I think what the overall consensus is that if you look at like second home areas, vacation homes, sort of luxury vacation areas, and then you look at markets where they have a bad jobs market or they're losing jobs to other markets, and you look at markets where there's low demand, where people are in general moving out of the area more than they're moving to the area, we can project for those areas potentially home prices coming down and actually I wouldn't say it's a market crash because that makes it sound like it's something it's not, but home prices probably coming down maybe
harder,
10-20%, something like that, if like at a worst case scenario. But here in Central Ohio, we kind of have the opposite projection because our jobs market is going up. The amount of jobs, like the number of jobs,
Intel's
the wages,
coming.
Intel, there's just as an example, icing on the cake. So we have thousands more jobs that we're forecasted and projected to get over the next, even out 8 years from now. So our economy and our population is growing. So we have such a supply and demand issue. I think we can still see, even in a market where nationwide we see flat prices, I still think in Ohio, specifically in Central Ohio, we could see a steep incline in prices, 5 to 10% over the next 2 years.
I think it'll recover. I think personally just seeing all the information and physically being in the market and feeling that like shift that happened a month ago, I think that it's gonna stabilize and I think hopefully get back to normal. I think the rising interest rates will help. I think it'll just kind of put everything back into a more normal level and help affordability come back really for first-time home buyers, because it breaks my heart when first-time home buyer goes in and they see a house at $220 and they offer $245 or $250 and they offer their parents money as a appraisal gap coverage and they waive remedies and they still don't get it, and it breaks my heart, and it's hard, but it is, I think, going a little toward normalcy, and so
absolutely. And to those buyers, again, I would give them a word of encouragement. Now's the time to get in the market, get your credit right, focus on that low down payment option. You don't need a 20% down payment to buy a house. You're going to need the lowest amount of cash now that you probably have in the last 2 to 4 years in Central Ohio. So much better spot, much better outlook.
Call Aric to find out what your personal situation is, because there's not a one-size-fits-all loan product. There's not a one-size-fits-all credit score requirement. So just give Aric a call and you guys can chat. And then you can come to me and I can help you find the house.
Absolutely. Call Kristy to sell a house, buy a house anywhere in Central Ohio.
Yes.
Sweet.
So thanks for listening, guys. And if you have any questions, please reach out to us. We're happy to answer any.
Thanks so much.